Welcome back. Now, according to data from the first half, on average, 2025 was meant to be a good year, a good salary year, that is, but a deterioration in the economic outlook is weighing on this prospect. In June, the nominal average take-home pay edged 0.1% lower, but on the bright side, at 17,310 Rand, it's almost 12% higher than a year ago. This according to the BankservAfrica Take-Home-Pay Index. The organization's head of stakeholder engagements, Shergeran Naidoo, joins us with more insights revealed by the research for the period. Shergeran, thanks so much for your time this afternoon. Now, as we get started, perhaps take us through the reasoning behind the slight downturn, considering that we've had a favorable inflationary environment.
Good afternoon, Taleng, and good afternoon to your viewers. Yes, as you've indicated, the take-home pay data does indicate that there's been a slight softening in the range of 0.1% from between this last reading and the previous reading. But if you would note, you would see that the data would also indicate that from January 2025 all the way through to June 2025, there has been a reduction on a much more material basis. This decline of 0.1% has actually been one of the smallest declines certainly in the last couple of months. But you'd find that it actually indicates that there's a bit more of a leveling off than anything else, because the declines earlier in the year have actually been a bit more material than the 0.1%.
Okay.
And were actually more reflective of what's been happening in the economy and in the broader geopolitical landscape as a whole. So yeah, I would actually say that even though there's been that softening, it's actually almost a bit of a leveling off.
And better news is that on a year-on-year basis, when you're comparing June 2025 to June 2024, there's even a better uptick when it comes to salaries.
Absolutely.
Does that then speak to also the economic environment, that even though the outlook to the economy is to the downside, it is better than where we were last year?
Oh, for sure, for sure. We're sitting in a very, very different situation from where we were last year. And I think if you look at just the inflationary environment that we've been living in, even though the June reading for CPI came in at 3%, it's a bit of a softening from the 2.8% that and 2.7% there and thereabouts. That for the preceding months. But if you look at it from last year, I mean, it's been very, very dramatic changes in the inflationary environment, and that's going to have the effect of 2025 actually being a much more positive year for real take-home pay. In fact, one of the things that had come out of our data was that 2024 was the first positive real salary from between 2024 and 2015. So between 2015 and 2024, we found that salary earners in 2024 actually had a 1.5% average take-home above inflation, so from a real take-home pay perspective. And we're anticipating that with the positive sentiment, so in as much as there does seem to be a fair amount of negativity as well, as I mentioned, what's been happening in the geopolitical perspective, the tariffs and so forth, we're still anticipating that the salary earner is still going to have a positive take-home pay this year as well, on average. So this will actually be the second average positive take-home pay for salary earners.
Let's talk about sentiment for a bit. Yes, I know you are expecting salaries to continue to increase this year, even with, the downbeat outlook that we do have. But looking at business sentiment and how that influences employment and also income growth. Talk to me about those dynamics and how they play out in this kind of economic environment.
It's actually a very, very important factor, and you can't underplay the importance of confidence and of business sentiment, because the more positive that and more upbeat that business is about the future, the more that they're inclined to invest in the business, the more that they're inclined to increase salaries, the more they're inclined to increase bonuses and so forth. And all of that would be as a result of a perception that the business is going to be thriving. Now, when you in an environment in which there is a fair amount of uncertainty, and we're talking about in the context of the tariffs, for instance, that could have the effect of causing business to become a little bit more apprehensive about the investment, a bit more apprehensive about the future, which causes them to actually then take a much more narrow view. And the ripple effect of that is that by not investing further into the economy, or not contracting further for new business opportunities and things that might require additional capital outlays, that will have the effect of curtailing money flowing through the economy. And that then has the ripple effect of a negative effect on the economy, on GDP. So consumer confidence is really one of the most important underestimated facets of an economy and of society as a whole. So the more we can do to instill that level of confidence, instill a level of stability, the better it will be for the economy.
And another factor that could possibly boost sentiment is, of course, those rate cuts. And we're crossing fingers and toes that Governor Lesetja Kganyago and his team do push through that rate cut come tomorrow afternoon. All right, unfortunately, we have to leave it there. Thank you so much for your time and just taking us through that survey. Now, that was Shergeran Naidoo, Head of Stakeholder Engagements at BankservAfrica.